Swain from the Investec Equity Derivatives Desk. We're based inside Capital Markets as a division of Investec Bank Limited. We've basically been making markets in equity traded derivative securities for a number of years now. We hold and run a warrant program, which is a listed note program on the JSE. We're active market makers in single stock futures, CFDs, OTC form of leveraged derivative out into the retail space. And we've recently sourced quite a bit of demand for note exposure from the retail and the hedge fund markets into generic indices such as the all-share index and other commodity type of funds. A lot of passive investments are now being invested in note forms which track a benchmark like an index in the foreign markets, and locally there hasn't been that much available to the retail public to invest in something like the all-share index, and so we've come up with two equity traded notes, one being the TopTri and the other one being the SwxTri, which we listed on the JSE a couple of weeks ago. Let's quickly talk to the TopTri. Essentially, it's a note which we've listed on the exchange, giving the holder exposure to the total returns of the top 40 index. The top 40 index is a market capitalization weighted index covering the 40 most actively traded shares on the JSE. The other product we have is the SwxTri, and in that particular case we reference the SwX40 index, which is slightly different to the top 40, same constituents, but just a slightly different weighting in terms of in the SwX we take account of foreign cross holdings, and what we tend to see is a slightly higher exposure to basic materials in the top 40 index versus the SwX, which is a slightly lower exposure. We get more industrials and financials roll up into the SwX. I think it's about a 22% basic materials exposure in the SwX and a 32% basic materials in the top 40. In essence, Anglos and Billies and our larger resources stocks make up a larger part of the top 40 versus the SwX, where we get guys such as MTN, Naspers, Sasol making up a slightly higher constituent. The reason we've gone with these two different indices is, as we know, the resources have underperformed general industrials in the recent times. SwX therefore has outperformed the top 40 index, and we just thought we'd give the public a slightly different form of exposure.